Well, we are now joined by Peter Chun. He's a managing partner at Silverbear Capital out in Hong Kong to get his insights on how the markets have fared in the first 3 trading days of 2019 and what his outlook is for the region and Singaporean markets in general. Peter, thanks for joining us this afternoon.
Thank you very much.
All right, Peter, let's start off first with how markets have done in the first 3 trading days of the week, of the year, actually. Japanese markets might have been feeling the burn today, but if you saw, as you probably saw over there in Hong Kong, it seems that markets across Asia are trying to rebound from these heavy losses, most notably in China, Shanghai, Shenzhen, Hong Kong, all posting solid gains today. What's changed for investors in these places?
Well, basically, I mean, the Hong Kong is very, very close to the United States because of the currency peg. But therefore, the U.S. market had definitely affected the Hong Kong stock market for the last couple of days, as you can see. But however, as you can see, China currencies is going up. And therefore, the China effect had actually helped the Hong Kong market a little bit, although it's the year end, as everybody knows, so everything slows down a little bit. It's New Year now, obviously, for a lot of funds. They probably haven't some come back from holidays, some never came back yet. So I would probably think everything will be pretty okay before the Chinese New Year in Hong Kong.
Now, the trade... Yeah, Peter, the trade war between the U.S. and China seems to be back in focus. Delegates from Washington are arriving in Beijing next week to kick off talks. And it seems that Chinese officials are expressing some optimism. How crucial are these talks going to be for the markets as we head deeper into 2019 from your point of view?
Well, I mean, everything goes back to the U.S.-China trade war and how each country is going to stimulate their own policies to hybrid this chemistry that they're creating worldwide. I think China will do pretty okay, although there is a large trade war going on between U.S. and China. Because I mean, based on the past track record on the GDP in China, based on the investment market outlook from last year performing, I would probably say 2019 will be an okay year for Chinese companies.
Now, here's one concern that seems to be emanating now from China. We heard recently, Peter, Apple CEO Tim Cook attributing their lower revenue forecast to lower sales coming from China. Now, for an economy that large that's trying to rebalance itself to be more consumer-driven, do global markets have to worry about a possible lack of appetite from Chinese consumers because of some of these concerns that were raised by Apple with regards to the Chinese consumer perhaps buying less iPhones?
This is a very, very interesting question. Apple, as everybody knows, is manufactured in China for many years. And both countries, including the United States, has benefited from the Apple product for so many years. Now, the decrease in the product revenue had actually shifted a very interesting positive momentum for some of the Chinese brands, for example, Huawei. So actually, overall, the balance sheets on the China end on consumer products like phones or cellular phones have actually not been affected. It's a shift, from say manufacturer A to manufacturer B. So on a China level, I don't think the effect is that big of a problem. Of course, Apple being a U.S. company, paying U.S. taxes, would have to somehow mobilize their own team to figure out how to move on from this point.
All right, we're still speaking to Peter Chun. He's a managing partner of Silverbear Capital. Peter, I want to ask you now about your outlook for Singaporean markets. We did see the Straits Times Index over 2018 lose almost 10% in a fall by about 10%. What is the outlook for Singaporean stocks next year? What are some of the big headwinds and opportunities for Singaporean equities?
Well, I mean, the good news is if everybody actually wanted to look at the Singapore annual GDP growth, it's around 3.6% in 2017, which has actually surpassed the initial estimates. And this GDP is mainly a result of a strong rebound in the manufacturing sector and a synchronized recovery in the global economy, which is linked to the Singaporean market. I would probably say the good news again for the Singaporean market is the real estate and logistics are still relatively stable, and I think the outlook for the market, capital market especially, based on what I just said with the manufacturing sector, with the real estate sector, I would believe in 2019 Singaporean market is going to be better than 2017.